Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to yet another episode of Decoding Nifty with me, where we attempt to find out the best probable setups for the next trading session, so that we can trade well. We are well prepared in advance as to what can happen in the market and how should we react to it. But I believe that the followers of this channel should be much more interested in the way I teach how I analyze the price, right? So we also analyze the trades that we had planned, how it unfolded in the live market, how I personally traded them, right? And second thing that we do is we plan the trades for the next particular day. So I believe what is gold right here is uh, how to look at the market from a pure price action perspective while also keeping things very, very simple, right? So on that note, let us start with what we had planned for Nifty yesterday and how it played out today in the live markets, right? And how did we do it? So yesterday was the first video wherein I put the disclaimer. Right? And today I'm giving out the disclaimer out in front. Today was a SL day for me. I took an stop loss. So I plan my trades and I trade those plans. I trade the exact things that I tell you guys on the video, and I'll be very, very transparent with you guys here. That is the reason I've taken an SL today and I'm out here accepting that yesterday my trade went kaput and I took an SL. So the plan yesterday was to long Nifty above this high with a pullback and shorted below this particular low again with a pullback, right? Nifty opened flat. When I checked the markets pre-open at 908, I saw Nifty was around just 15 points gap up and it opened flat. That was my alert. See, this is how I prepare myself. So that was my alert that Nifty is opening flat. There is an opportunity to get a good trade right in the opening hours of the day. Nifty opened somewhere around here and had it formed a positive candle around here, gave us a pullback, continued its upward journey. That would have been the best case scenario for today's Nifty. But that is something that market does. It does not behave as you expect it to behave. Market moves in its own manners. Nifty formed a big red candle right at the open, closed below our sorting zone, right? Now came this particular pullback. In case, see, this is something which has not happened in the live market, but this is what I'm telling you how I was thinking when only this candle had formed market. All these candles were not there in the market. I had planned to short the market as soon as this low was taken out. Why? Because that was what we had planned, right? We had planned it the day before. You can watch the last video. But Nifty went all the way up here. Now, have spoken a lot of times about open equals to high candles, wherein if a candle is the opening is the high of the candle, and once the price goes above it, all the people who would have shorted the markets around here would be trapped, and their stop loss triggering plus many people missing out on this particular move, entering into longs can lead to a good particular momentum on the upside, right? Plus, this was also happening at a crucial price point, which was the previous day high. Now, these locations are extremely important, like previous day high, previous day low, previous day close, right? So, this was the open equals to high candle and the day's high along with previous day high were all at a same zone, right? So, this was a good point of good point of interest or good confluence point of zone. And as soon as this particular candle closed, all we needed was a pullback, which we got in the right next candle. And I entered somewhere around the nine in this 955 candle, and I took an SL within 2 minutes. Now, don't ask me why, because I'll explain it. Uh, I took a very small SL. Uh, because, see, again, I'll explain the psyche of why I did not enter with full quantities. I entered with only half of my usual trading quantities, and I had planned that in case if this breakout continues, we see some more pullback or halt, and if market breaks those high, I will be adding more quantities. But right now, because the market has already traveled up this particular distance from the bottom, it has given a good move around here. It was highly improbable that it would give me a good up move right here. But this setup was too good to not be traded, right? Because of the open equals to high around previous day high, today's high, day's high, everything being taken out at once. Got a good pullback as well. The right SL would have been below this particular. candle on the 5 minutes time frame, but because on options, because of the option decay, the options movement was sluggish. Plus, I was getting a big stop loss, so I switched to a 1 minute time frame, got the nearest swing, which was a pretty small SL for me, and that is where around 16, 17 points was the SL that I had taken, and this was the exact candle in which I had exited in the same candle. So within 2 minutes, I had exited. So after that, market gave a small green candle inside candle, and then again gave a good dump down here, right? Now, again, we could have shorted the markets below the break of the day's low, and we could have targeted the previous day low as a good target price for where the price could have gone to. But market today was extremely volatile. It formed a double bottom around here, gave a move, then went again sluggish. I did not participate in this particular move because again, this is inside a inconsistent zone wherein I consider this particular zone as a no trading zone. So either I'm trading a trade, taking a trade around here or below this particular low. Nevertheless, there was just one good trade which could have been taken around here, wherein markets again came down here, did not breach the previous low, gave us a double bottom. If you look at it on a line chart, you will be able to clearly understand it. And as soon as this high was taken out, a trade could have been taken. Although I did not participate in this trade, I was observing some erratic behavior of price in the both call and put options. I was trying to analyze that. I was trying to look at the uh, market depth of both call and put options to see if I could see any unusual buying in either the call side or the put side. And since I was analyzing a lot of multiple strike prices to see if I can see unusual or heavy buying by institutions, either of the call or put options. But I did spot some orders, but those were not convincing enough for me. And that was the reason I did not participate in this particular short covering move which came. In case if there's anyone who observes I only observe the open interest uh, on the expiry day as well as one day before that. Today I was observing the OI and the option, the call writers at 23,300 levels started moving out as soon as this particular move had come, and they moved out and quit their position. So that was the reason for this particular short covering, which I did not participate in. Now I had an SL day. No, there's no big deal in it. There will be days wherein you will do everything right as per the setup. Everything will look good, but still the market will take your SL. And it is not that even after taking my SL, the market did go in the right in my direction. Nothing of the sort that sort also happened. So there's a famous quote that goes into the stock market that the market can remain just what was that? Irrational, right? The markets can remain irrational longer than you can remain solvent, right? So uh, the market is supreme. On days when you get that SL, you got to accept it. So see, when you take a trade, there are only three possible outcomes that can be there. Either it will hit your target, either it will hit your stop loss, or the third case scenario is it will hit your trailing stop loss. That is what I try to do in case if of a trade that I'm fully convinced in. In case of trades such as this particular trade, in case this would have been gone into profits quickly, I would not have held it for longer and I would have been quick to book the profits because this was a low probable trade. Right. In case of a high probable trade, I try to trail my SL so that I can book in and catch the maximum move, right? So that is what it is. And I have no objection in taking an SL. Everyone should take an SL once in a while. It keeps you grounded, right? And see, I it hardly impacts me because what really matters is when you take an SL, how big is the loss that you have taken, and when you take a profit, how big is the profit that you have taken. So that is where the RR ratio, the risk to reward ratio, is something that you should put a good emphasis on and keep it on track, right? In that case, even if you hit SLs on say majority of your trades, but if you have a good RR, you will still be net profitable. So for let us on that note again, that's enough of the psychological part. We'll plan the trades for the next day. Tomorrow trading would be very, very simple. Tomorrow is again expiry day. And while I'm removing these lines, I'll again repeat the same words that I keep on saying to you guys. In case if you are trading Nifty, you are trading Nifty options tomorrow, it's my humble request, please trade in the next weekly expiry options. Do not trade in tomorrow's expiry options. That is something which I personally do, and I personally suggest to all my followers and people who are around me that for a particular expiry, if on the day of expiry, please do not, if you are into option buying, do not trade using the same expiries, the options. The option prices might look extremely attractive. They will be cheap and they will call you to buy you. So to buy them, but again, don't be fooled by them, because in case of a sideways move or a move against you, you will lose a lot of money very quickly, which you can safeguard yourself by shifting to next week expiry options. You might pay a little premium, but I am telling you with experience, it will be 100% worth it, right? So again, for tomorrow, the plan has to be very simple. We long the markets above today's high with a pullback, and we short it below uh, today's low again with a pullback. If we look at Nifty on a daily time frame, uh, this today's and yesterday's both the candles, although intraday the price action was extremely volatile, but this candle is extremely bullish. So I am not looking at shorting the markets until and unless this low is taken out from the market, right? And longs can be created above this particular high. Absolutely. And in case if market opens somewhere in between with a maybe with a gap, since markets have closed near the day's high, I'm not expecting a big gap down or maybe even a gap down. But in case if the markets open around a gap down, I believe this would be a good support area. So from the zone where the markets broke out of this particular range, this particular candle when it broke out, this particular zone will be a good support area, and we can look at a double bottom around here to find a good trade for the bullish side, wherein you'll also get premiums at a very discounted rate, right? So let's see how the market unfolds for us tomorrow, and let's keep learning together. So that's it from my side for today. Please like and subscribe to the videos, and I'll see you guys again tomorrow. Cheers. Have a good day. Thank you so much.